be wondering, when is a good time to invest? When do I buy and when do I sell? Now, I'd say the best time to invest is right now, obviously. Yeah, no, there's a little bit more science to it than that. Part of making the decision about what to invest in your portfolio is about deciding when to invest in it. How do you figure that out? Well, there are a few different ways to slice it, and so I thought I'd bring in the big guns to help us work them out. My co host, or should I say my co ghost, is here to help us understand when is a good time to buy and when is a good time to sell. Okay, everyone, so without further ado, I would like you to meet the finance ghost.
Hey, Carly. Hey, everyone. Thanks for having me here.
Awesome to have you. So the question of the day is, when is the right time to buy a stock? How do you time that decision?
So, Carly, it's a really important question. And if you can get it right, you can really turbocharge your returns in the market. And honestly, my biggest advice would be don't buy hot tips, buy a hot analysis. You need to work through stuff and make sure you understand it. You know, when there's a lot of fear in the market, what you often see, the baby gets thrown out with the bathwater. Stocks will move together. How often will you hear someone say, oh, everything is down 30%? But should everything be down 30%? Probably not. Within that basket of things that are down, some of them might deserve to be down even more. Some of them should only be down 10%. So right now, for example, we've got Facebook sitting on a PE of 26, 27. There are South African companies sitting on price earnings ratios like that. So you need to look for these gems in these big market sell-offs or other companies that have not quite caught on yet to a big market rally and try and identify those as your buying opportunities.
But where can you go to these places that you mentioned, looking at like financial results or analysis? What are some resources that people can use?
So I'll give you two really quick tips. The first one is Yahoo Finance, and it's really great because a lot of the key ratios are there and it's all free. So you can get your price earnings ratios, you can get your revenue multiples, you can get a lot of the stuff that's relevant, especially to the sort of meme stocks that are very popular, these tech companies. You can go in and see last quarter's financials, last year's financials, everything is there. So you're looking for growth rates, you're looking for cash flow generation, and you're looking for what multiple these companies are trading on. Then what I always go and do is I go to tradingview.com because it's nice, you can draw a really big graph. And you can just look for entry points. You can use techniques like resistance and support. And this stuff takes a while to learn, but actually it's not that difficult. If you stick to the really simple techniques, a lot of it is quite easy to understand without getting into fancy technical analysis. And if you combine the two and you do it consistently, you'll find a better result in your portfolio.
Now, guys, I think we all know that with investing, it's really important to have a long-term point of view. You're not looking at something today or tomorrow. You're looking at something over years and years and years. And that's because markets by nature are volatile. They go up and down. There's no chart that you'll ever look at that has a perfectly straight line in any direction. It goes like this. So it's really up to you to decide on timing eventually. What is your personal style? What are your goals? What's your time horizon? But when that point does come and you think that you might be ready to sell a share, Ghost, how do we work that out? How do we know when the right time is to sell a share that's in our portfolio?
So selling's a difficult one because then it starts to become a trading portfolio in many ways. So one of the ways I think about it is, what am I not buying? Because I think a lot of us are in our asset accumulation phase. I think a lot of EasyEquities users, you, me, we're all young and looking to accumulate assets. So a lot of it comes down to, rather than what to sell, is what to not buy. And there you're trying to avoid things that are clearly overpriced. Now, obviously, if you hold something that is looking very overpriced, then sure, you might want to think about selling it. If you bought Tesla last year, the right time to sell was 4th of January this year when it got to about $880, and now it's down about 35% from there. So how could you tell that Tesla was running too hot? I wrote a lot about it at the time, but there are a few tricks. So one is social media sentiment. If everyone is talking about something, it is probably running too hot. So SPACs are the best possible example of that. When Chamath was tweeting 10 times a day and posting selfies of him in the gym and talking about SPACs, that was a lead indicator that we may have reached the top. So that helps. And then you're also looking for people overreacting to trends. So for example, with Zoom last year, it was a magical investment if you got in early. And ideally, you needed to sell in October. What happened by October is the market was valuing Zoom as though we will never meet in person again. Zoom's a great business. We're on a Zoom right now. But people are going to meet in person again. Zoom has a lot of value, but nowhere near where it was in October. And you can just apply common sense to that and say, look, what do I need to believe in order for this price to be true? In order for Tesla to be more valuable than every other car company in the world combined, what do I need to believe about Tesla's market share 10 years from now? And often you can just use common sense and say, no, this doesn't make sense to me. This feels too much. If I'm holding the share, either I sell it, in which case you're going to have to think about the tax, or I'm just going to not buy it. I'm going to buy something else this month.
I like that way of thinking about it, actually, because what you're saying is also just be considered when you make these decisions. Don't just buy or sell at random. Really think about what you're doing. Think about the future of this company. Think about what it means for the industry that it's in the next 10 years. Don't just do things randomly. And is it a case, I mean, this is something I hear about all the time. Just buy low, sell high. Ultimately, is that kind of what we're saying here?
In a perfect world, if we all had, the ability to trade with hindsight, yes, buy low, sell high. I mean, then you're guaranteed to always make money. And that is the principle, again, if you're trading. So for people building a long-term portfolio, I stick to my principles and I do not buy things that I don't want to hold for a long time. And sometimes I miss out as a result. I'd never believed in Tesla, but I still should have bought it last year and I should have sold it at the end of the year and made a lot of money. So I just stick to my principles of what do I want to hold long-term. And then it makes it easier to ride those dips. So Massmart was a great example. I bought in last year. It was red for a long time, but no one is forcing you to sell. So if you still believe in the reason you bought the company and you bought at the right valuation, you can wait for it to turn around and come to you and then hopefully shoot into the green, which is exactly what's happened with Massmart. It was actually one of my best performing shares over the past year. And no one is talking about Massmart globally. It's not one of the fan stocks. So there are great opportunities out there to actually make smart investments that are not necessarily what people are talking about on Twitter. And it's about being consistent and measured, as you say.
So do your homework, invest with conviction, and time your investments in the best possible way. Thank you so much, Ghost, for sharing your pearls of wisdom. I hope you will be my co-ghost again soon sometime.
Absolutely, anytime.